stocks for your self-managed super fund with independent investment expert Roger Montgomery. How are you, Roger?
I'm well, Peter, and thank you for having me on again.
Yeah, great pleasure, mate. Now, one of the challenge I set you for this week was, imagine if Roger Montgomery was starting a self-managed super fund. What would you be putting into that fund?
Well, yeah, look, if I could have anything, I'd have a vintage Maserati in there, and I'd have some artwork and probably some. Would
you actually make money out of it, do you think?
Oh, probably. I'd have fun driving it.
Collectibles do work.
Oh, they can. Yeah. They can. Look, in terms of the stock market, the way I invest in stocks would be the same, whether I'm starting a super fund or I'm well down the track on my super fund as I am. Yeah. The things that we've always talked about are this: you want to buy businesses with high rates of return on equity. You'll always do well buying those sorts of businesses. You'll do well if you treat the stock market not like a horse race but like a supermarket, and you want it to be on sale. So we're looking for businesses, the good businesses that are cheap. Buy businesses with little or no debt. Buy them at discounts to their intrinsic value, and you're going to do reasonably well. If I was going to start my superannuation fund today, I'd be putting in the same stocks that I have in my superannuation fund and that I invest in all the time. The same sorts of businesses. I've got a list of them here for you if that's what you're after.
Yeah, we'll get to that in a second. Would you have a percentage in cash? Would you have a percentage in...
I have made my profits in the stock market by not thinking about this, what's called strategic asset allocation or tactical asset allocating. I don't worry about, well, I want to have 30% in cash and I want to have...
Because you're not going to sue yourself if you make a mistake, are you? Financial advisors do.
My wife will get pretty cross at me if I don't make profits, but if I make losses. But I don't think about it that way. I'd rather have my money in a business that's able to retain profits and get 20, 30, 40% on that incremental equity than have it sitting in the bank getting 6%. So while I think cash is the best place for your money when you can't find superior investments, if superior investments exist, and that is businesses that generate high rates of return on equity and have sustainable competitive advantages, if they exist, well, I'd rather have my money in those. And I'm not worried about short-term concerns about the stock market or the economy. I'm really concerned about which businesses do I think are going to be kicking goals in 5, 10, 15 years' time. Which do I think are going to win the race?
Yeah, okay. So let's run through the stocks that you'd be putting into your self-managed.
And your question to me was today, starting at today.
Precisely.
So if it was today...
And that's why, we've talked in the past, but I want to know your position today.
Yeah, okay. Well, here are some businesses that I think are worth considering. There's a company called Credit Corp, which is a debt collection business. That's a business that has had its troubles in the past, but
you were a fan of it many years ago.
Yes,
and then
not, and now it seems to be as though it's ticking the boxes and it's making a comeback. Here's another little one. I don't personally believe this is ever going to be a JB Hi-Fi, but I think there's a short-term opportunity perhaps in this business. There's a business called Cash Converters, and they seem to be ticking the boxes.
How long have they been listed for, Roger?
Quite some time.
Yeah, because they were a franchise business when they first started.
Yeah, exactly. And look, the reality is there's some noise about them moving into consumer finance, which is arguably what they are. But really, when you look at all of their material and all their collateral, they're a retail business. What's interesting is I've been to a few stores, and despite the shops next door being empty, there's quite a few people in their stores, and I was taken aback by that. I thought that was interesting. JB Hi-Fi, business that you know, I've liked a long time. On the nose at the moment, quite obviously. People don't like it at the moment.
So therefore, the relationship between the share price and the intrinsic value, it has a big buy sign for you.
Yeah, well, that's right. Unless the company comes out and downgrades, and you might remember they made an announcement that they were 5% below budget. So at the moment, I want a big discount. I'd want a very big discount to intrinsic value. And the discount that I've got at the moment is about 18%. Ideally, you'd like businesses with a 25% or 30% or even more, 50% discount to intrinsic value. And there's a couple that I'll mention here.
Well, if we get time, we'll go back to JB Hi-Fi. Let's
sure.
Keep going through.
ARB Corporation, another business that I think is at a discount. It's about 11% discount to its intrinsic value.
What's it do?
Well, we've talked about it before. It's a bloke's business. They manufacture bull bars for four-wheel drives and if you like. Yeah, okay.
Well, but I can understand. Some viewers might not know. I asked a question for the viewer.
Okay, all right. So for the viewer, the bull bars, snorkels for diesel engines on car seat and cross cross rivers and, you know, you can roll your four-wheel drive.
Big toys.
Exactly.
Okay.
You know, I don't see, I'm sure there are some women who have these big four-wheel drives.
Some lucky women out there, by the way.
Well, that's right. And women are entitled to buy whatever car they like. I'm not suggesting that. It just tends to be more blokes.
A woman at Blackheath the other day in a big Land Cruiser shook her head at me because I was taking too long crossing the road. I thought to myself, I must be walking like a girl. And she shook my head at me.
Yeah, she's in a rush. She's got kids to pick up from school, probably.
Exactly.
Then the question is, what are you doing in Blackheath during school hours? You know, when you should be at work.
Actually Saturday.
Oh, it was a Saturday.
Yeah, she should be
relaxed.
Probably picking up a steer somewhere at the local abattoir. Anyway, go on.
Very good. Oroton Group, another business that I like.
Yep.
Some caveats there. You've got to understand where the business is going to be in 5 or 10 years' time. Does it have the opportunity to open a lot more stores? I think it does, but people are debating that. DWS, which is an IT servicing, corporate IT servicing business. There's a few of those around, but this one has some really good clients. Generates very high rates of return on equity. Doesn't have a lot of capital, so the free cash flow, the cash flow that it generates, can be distributed back to shareholders or used to buy back shares.
Cool.
A couple more. One of them will be Topical. Flight Centre is still cheap, and
it keeps reinventing itself, doesn't it, Roger?
Yeah, discount and still at a discount, despite the fact that, you know, it's in the good books again, but it's still trading at a 3 or 4% discount to intrinsic value, and I've got its intrinsic value rising at about 10% a year for the next 3 years. The Aussie dollar's obviously helping it. Lots of people travelling overseas, and here's one that I know is topical today: the Commonwealth Bank. It's a business that's trading at a slight discount to its intrinsic value, and all the banks are trading at about their intrinsic value, and I've got the values of all the banks rising at a good clip over the next couple of years. Look, I was saying this in Newcastle last night at a presentation that I gave for a broking firm. You know, if you live on an island and people can't swim away, banks are really good businesses to own. You know, the cost associated, the personal cost associated with you and I changing banks is much, much higher than the benefit we're going to get when we cross the other side. You know, there doesn't really seem to be great benefit. They're all pretty much of a muchness. So it's interesting. And the 4 banks together have 92% market share, which is the reason for the inquiry that's about to, you know, the terms of reference have just been set, and they have a big market share.
Is that the last company?
Yes.
Okay. This one little issue. We're talking about more and more people buying stuff on the internet because of the dollar and stuff like that.
Yes, I did leave a couple out, but I'll come to those in a sec. Yep.
JB Hi-Fi and companies like Oroton, are they, in a sense, going to be challenged by the new retail
environment? This idea, well, because the Aussie dollar's at parity, then, you know, we're all buying stuff overseas.
The bookshops suffer the same sort of thing.
Bookshops. And look, I think that's true. I think the Aussie dollar won't always be at $1.05 or $1.10 or $1. It won't be. And not only will JB Hi-Fi miss out on some business as a result of this, but their competitors will as well. Now, JB Hi-Fi is the lowest cost provider. That's their competitive advantage. They're known for providing the cheapest. So as long as they stay the lowest cost provider and they've got share of mind, then what's going to happen is they're going to do better than their competitors. So they'll end up winning market share from their competitors.
Okay. The last
couple more. Matrix Composite and Engineering, Forge Group, which is another one, and one that floated, and I've talked about it before on your show a couple of weeks ago, and I wrote an article about it a few weeks ago as well. A little company that listed just the other day, MACA, MACA, and its code I think is MDL, and they just listed, and admittedly at a 43% premium to their issue price, which was $1, but I still think they're worth more than that.
Fantastic, mate. For people who might have thought it was a bit too fast, you do have a blog on my website as well.
Yes.
I'll show this tomorrow, and you can also go to your website.
I'll put together the list, email it to you tomorrow, and you can put it up on your website.
Excellent, mate. Fantastic.
Okay.
Thanks
No
for
worries,
joining us.
Peter.
As always,
Cheers.
Roger.